VYM is one of the most popular and powerful dividend ETFs on the market. In this short video, you'll learn everything that matters about it. We'll cover what it is, how it performs, and whether it could be a smart investment for you. Let's go. Part 1. What is VYM? The VYM stands for Vanguard High Dividend Yield ETF. It was launched in 2006 and is managed by Vanguard, one of the largest and most trusted asset management firms in the world. The goal of VYM is simple: track the performance of companies in the U.S. stock market that pay high dividends. It follows the FTSE High Dividend Yield Index, which includes companies that are forecasted to have above-average dividend yields, but excludes REITs. Part 2. Key characteristics. Vanguard High Dividend Yield ETF trades under the ticker symbol VYM. It's a passive ETF, meaning it tracks an index and isn't actively managed. It currently has over $65 billion in assets under management, making it one of the largest dividend-focused ETFs out there. The VYM holds around 450 different companies, giving investors broad diversification across U.S. high dividend-yielding stocks. One of its biggest advantages is its low expense ratio of just 0.06%, which means you pay only 60 cents a year for every $1,000 you invest. The dividend yield typically ranges from 3% to 3.5%, and dividends are paid quarterly. When it comes to sector exposure, VYM leans heavily into financials, healthcare, and consumer staples, sectors known for stability and strong dividend histories. Part 3. Top holdings. As of now, some of the top holdings in VYM include Johnson & Johnson, JPMorgan Chase, Procter & Gamble, ExxonMobil, Pfizer, Walmart. These are large, blue-chip companies with a solid history of not only paying dividends but increasing them consistently over time, making them ideal for investors seeking both stability and growing income. Their strong balance sheets, global reach, and leadership in their industries help them weather market volatility better than most, providing reliable cash flow to long-term investors. Holding companies like these through VYM means you're tapping into the backbone of the U.S. economy without having to manage each stock individually. Part 4. Performance. Since its inception in 2006, VYM has delivered an average annualized return of around 7% to 8%. That includes both price growth and dividend reinvestment. While it won't grow as fast as some growth ETFs, it's designed for steady, reliable income and long-term stability. It's performed well during bull markets and has shown some resilience during downturns thanks to its dividend-paying companies. Part 5. Why invest in VYM? VYM is an excellent choice for long-term investors who are looking for passive income and want a low-cost, diversified investment that helps reduce overall risk. By focusing on high-quality dividend-paying companies, VYM offers a way to beat inflation through consistent payouts. It's particularly great for retirement accounts like IRAs and 401ks, allowing you to build wealth while enjoying regular income. With VYM, you gain access to hundreds of top dividend stocks without the hassle of picking them yourself. If you want a set it and forget it investment that can grow over time and continue to pay you while you wait, VYM is a solid choice for building a reliable and growing portfolio. Part 6. Real-world example. Now let's put it into perspective. If you invested just $100 a week into VYM for 30 years and it maintained its average annual return of around 8%, you could end up with over $540,000. That's the power of consistency, compounding, and dividend reinvestment, all in one ETF. If you're looking to build wealth and earn passive income, VYM is one of the best ETFs to consider. But remember, this isn't financial advice. Make sure to do your own research before making any investment decisions. Let me know in the comments if you prefer VYM or any other ETF and which one you'd like me to break down next. Don't forget to like, subscribe, and share this with a friend who's building their portfolio.